Chase Bank is now reporting business credit cards to personal credit profiles. Now, first Chase Bank was handing out all this credit. Then they started reducing limits, and now they're reporting business credit cards in good standing. So we know that when a business credit card goes delinquent, the issuer can report that to the personal credit profile. But as long as it's in good standing, there's no derogatories and it's not in collections, then it's going to remain off of the personal credit profile. And one of the benefits of utilizing business credit in the first place is to have all that utilization not reporting on your personal credit. So it doesn't increase your utilization and drop your score. But guess what? People are now reporting that Chase is reporting business credit card utilization on personal credit reports, even if the account is in good standing. Now, I'm not a conspiracy theorist, but I think that there's a bigger play going on right now when it comes to Chase. So I was talking about how Chase is a part of early warning services. So for those who don't know what early warning is a company that basically was formed by the top banks in the United States. So Bank of America, Wells Fargo, Chase, Truist, all the top banks actually own early warning. So it's a private company, but they share data amongst each other. And as the name suggests, early warning is going to alert these different financial institutions about the credit behavior and the consumer behavior of a lot of the customers who are a part of the banks within early warning. Now, early warning is owned by the top banks, but there's over 2,500 different credit unions and banks that are partnered with early warning, meaning that they're sharing data amongst each other. Now, let's say you have some derogatory accounts and you get those removed off of Equifax, TransUnion, and Experian. That information will still be shared amongst early warning. So you can't run off on one bank or have high credit utilization at one particular bank, even if it's on a business credit card and the other banks don't know about it. So that's one of the things you have to pay attention to when it comes to the big banks, is that they're sharing data amongst each other outside of the major credit reporting agencies. Now, I think what's going on with Chase reporting business credit utilization on the personal credit profile is a setup, because imagine if you're utilizing a business credit card for business purposes. Now, on the business side, people usually utilize it at a much higher percentage because it's being put to work. So if you're needing equipment, if you're needing to purchase vehicles, whatever the case is, there's a higher appetite for credit usage on the business side versus personal. So if you're utilizing, let's say, a Chase business credit card to fund your business, to purchase equipment, whatever the case is, and you're utilizing a high percentage of it, once that hits your personal credit profile, your credit score is going to plummet. Now, here's another thing to consider. Let's say you do have a Chase credit card, $50,000, $75,000, and you're utilizing a high percentage of it. That balance reports on your personal. That's going to increase your debt to income, and it's going to make your FICO score plummet like a rock. Now, imagine there's other banks and institutions that are constantly monitoring your consumer and business behavior, and they see, okay, your credit score just went down and your utilization went up and your DTI just went up. That might trigger other institutions to also cut your credit limits. Now, they're saying this whole thing about Chase reporting business credit card utilization onto personal credit profiles is a glitch, and they're going to correct it. But how are they going to correct it? Because are they just going to not report that anymore, or are they going to remove the account entirely from your personal credit profile? Now, the reason why I'm not buying that this is a glitch, because you think about it, how long has Chase business credit cards been around? It's not like these are new products. To inadvertently report to personal credit, what could have possibly caused that to happen? Now, I think what banks overall are trying to do is get an insight into not only what's reporting on your personal credit, but also what's reporting on the business credit profile. And the other thing I wanted to point out is that your business credit utilization is not necessarily something that's outside the purview of banks, because on your Experian business credit report and on your Dun & Bradstreet credit report, it lists the beneficial owner. So your name is going to be on that credit report. So a lot of times when people think about, oh, I'm separating business from personal, lenders and banks still have visibility into the debt that's on the business side. Now, I think overall, banks are trying to get a handle on this out of control debt. And I've talked about this, how a lot of this 0% business credit card has been promoted and hyped all over social media. You have thousands of people promoting this, saying, I got a Chase rep, I got a rep here, I got a rep there. And the problem with it is that a lot of consumers and even these LLCs are getting credit and they don't have the ability to repay. And I think that's starting to hit a lot more, and banks are starting to see these defaults rise. So they want more visibility and more data, and they're changing up the rules. So I don't think this whole Chase glitch about accidentally reporting business credit card utilization on personal is an accident. I think that banks overall want to have more visibility, not just on the personal, but also on the business, and tie that to the beneficial owners. Because what a lot of people will do is they'll have a low personal utilization and they'll just transact exclusively on the business side. But I think banks are becoming hip to that, and they want to know what's going on the business side. And if they're able to report business credit information on the personal side, that's going to actually show how much debt that you're quote unquote trying to hide by just having business credit cards, which you're personally guaranteeing in the first place. Now, the last point I want to make, and this is something that's often not mentioned when it comes to business credit, is the ability to repay. Now, I've been sharing how a lot of people's credit limits have recently been cut. Now, here's the thing. 0% credit cards could be enticing, right? You can utilize it for 12 months and only pay the minimum payment and not accrue any interest. But the thing about it is that when banks see that your revolving balances for an extended period of time, let's say 6 months, just know that the longer that you're holding their money and not paying down that balance significantly is the more risk that they perceive. So if you're only paying the minimum payment, that's going to put you at a higher risk, because the way the banks look at it is like, look, when are we going to get repaid all of our money back? And if you're just utilizing, let's say, a $50,000 credit limit, you max it out on the business side, Chase Inc. credit card or Chase Inc. cash credit card, 0%, you're only making the minimum payment, you're revolving that balance for several months, and you're not making a dent in that debt that you have. That's only going to put you at a higher risk, because at the end of the day, banks like transactors versus revolvers. Transactors utilize the credit cards, they swipe on the credit cards, but then they pay it back, because the way banks make most of their money is not from the interest, but rather from the transaction fees, from the swipe fees. So if you're swiping, they're making money. If you're paying it back fast, it's reducing risk. But if you're swiping and then just holding the balance and not really continuing to swipe, that's just more risk, right? Yes, banks do want to earn interest, but it's not guaranteed that they'll get that interest if your balances are too high and your ability to repay that, right? It doesn't matter if they're earning interest off of you if you're defaulting. So that's just one thing to keep in mind. Don't fall for the trap of 0% interest. And I do think there is value on the business side, but on the personal side, I do not think there's any value to 0% APR, because if anything, all you're doing is having a high utilization for an extended period of time, and that's going to subject you to possibly getting your credit limits cut as well, because the longer you hold balances, especially in this type of economic environment, is the more likely that banks are going to want to remove some of that risk. And by removing that risk, what they'll do is they'll slash your limits, maybe even close your accounts. So just be careful out there. I just wanted to give you guys this information. Let me know down in the comment section, has any of your credit limits been reduced recently? And if you have a Chase Business credit card, is it reporting to your personal credit profile? That's all for today. Until next time, take it easy, and we'll talk to you soon. Peace.